Welcome to Markets Now. I'm Michelle Ruck along with Nick Tsiolis with Farmers Keeper, and we are seeing some mixed trade in the cattle futures right now with feeders lower. Live cattle to the plus side as well as hogs, and over in the grain trade, kind of a quiet session in the row crops as we're seeing some two-sided action there already this morning, but wheat futures have pulled lower. And I want to start off talking about wheat first off, Nick, because what's the pressure from here? I know we've been watching the Black Sea grain export deal and the negotiations there, but inspections, it sounds like maybe are starting to resume. Is that right?
Yeah. And so like when we pair that with rain falling in a lot of the right areas over the past 7 days and then coming up now soon, even though that's a little bit too late, all those factors are coming in and taking a big drop in wheat. And I think producers have still been pretty apprehensive to make sales anyway. And as we've just seen prices steadily come down over the past really year now since we peaked at around 13 bucks.
What do you think about the Black Sea grain export deal? Is it going to be extended on the 18th here or not, or before the 18th?
So I have a feeling that it is going to be. Both sides have every incentive to do that. The Russians are in a really bad position, and they're trying to negotiate and use any type of splinter that they possibly can to get some leverage there. But at the end of the day, they need the foreign currency, and they want grains to get out. So I think that this is them really playing a lot of politics. But at the end of the day, I just don't think that that's weighted as much in the market as it was 6 months to a year ago anymore. That's not what we've been reacting to just because exports and demand are so weak right now.
So yesterday, corn and soybeans were down, and it was a pretty ugly day as we saw China cancellations of corn. We've got fast planting pace. We were down in the overnight session, but we're holding together here at least. We haven't taken out the previous lows here, so that's at least some good news.
It's a little bit on the positive side there, so that's great. I mean, what we're more concerned about than anything is everybody got so excited and we were trading on highs as we saw China start making some purchases that we hadn't seen in a while. And now that's all reverted again. So, I mean, with that and a potential El Nino weather pattern coming over this summer and a really good planting pace, we are, with the acres that we have with corn, or that it looks like we're going to have, we are poised to have a really strong crop. And it's not inconceivable that we could have, a national yield of something like in the mid or a little bit higher 180s. And if that happens, we reset our stock situation and revert to a whole different type of market. And that seems to be where the smart money, the funds, are moving right now as it is, being net short in the corn market. So we've got to factor that in. And if you look back at markets like 2012, 14, 2008 and everything, into the 90s, when these supply and demand shifts occur, the market tends to react the way it is right now.
Yeah, this is basically a reset like we saw in 13 is what you're saying.
Yep, correct. Yeah.
All right, so as we go into the WASDE report on Friday, we've got two different crop scenarios that we're trading. I mean, we still have tight cash basis levels, tight supplies on old crop of corn and soybeans. New crop, as you mentioned, though, obviously we're looking at some bearish numbers in terms of a production switch. Do you think we're too bearish going in, though?
I think we're still riding on highs from the past 3 years of just seeing bullish markets. I'm personally not too optimistic there. Our mindset tends to lag behind what the reality of the markets are telling us, unfortunately. I'd love to have better news on that, but I think we still have a little bit of a ways to go down here, especially as we get into pollination, if things really look good. We can't just have a hope and a prayer that there's going to be, a weather scare coming up, because weather scares can go both ways. Weather can also go pretty well, and planting can look good too.
Yeah, absolutely. And demand is really a wild card here as we go into the reports, both old and new crop, don't you think?
Yeah, absolutely. And we need to look at economic data out of China as well. They've ended their mass shutdowns, but they're not recovering and getting back up to speed as fast as everybody wanted. So if we can't have them as a player in the market, and they've got these cancellations, That's going to be a really big challenge for us. On the bright side, though, we're seeing, CPI information came out this morning, and inflation data was better than expected year over year. So that's a good thing for the consumer.
Yeah. And you mentioned the China cancellations. Really, they're switching their business to Brazil. That's really what it's all about, isn't it? Cheaper sources there.
It's a lot cheaper to go to Brazil right now at the end of the day. And something for, we've seen a lot of people complaining, well, how can they cancel a shipment and everything? I just want everybody to keep in mind, there are big financial contracts around these large shipments. And when a company or a large country cancels a shipment like that, there are financial repercussions to that cancellation. But what they're gauging themselves is, it's cheaper to cancel the American purchase and then just buy for much lower from Brazil. That's what they're doing. So there are financial repercussions to doing that. It's just outweighed by buying something a lot cheaper from Brazil.
Right. The last time I talked to you, we were talking about river closures on the Mississippi with flooding, and now it looks like some of that is eased and some of those locks are reopening.
Yeah, that's correct. Overall, things haven't been as bad as were expected. I think especially at this time of the year, as we get in the growing season, everybody gets a little more on edge on those things, myself included. And things seem to be a lot more opened up. It's been about a couple weeks since we talked when some of those closures happen. A lot of that, most of it is opened up as it is. And at the end of the day, it doesn't really matter where the river level is if there's no barges going down it.
Yeah. And at least demand right now is probably light enough that it wasn't a major interruption. What
That's
about
right.
livestock producers? What are you telling them with the pullback that we've had in corn prices and feed prices in general? Are you telling them to get some feed needs lined up, or should they wait for this big new crop to come in?
I always say reward the market. In this case, as a buyer, rewarding the market means go out maybe and make a purchase as things are lower. And even though I've been sounding a little bearish in this conversation, you never know what's going to happen in the market and what can reverse. We're at good levels right now. It's not a bad idea to go make that purchase of 5 or 10% of what your total needs are yearly, or whatever your normal purchasing increment is, that you may be supplementing with other rations. But a good level is a good level, and it doesn't matter what happens tomorrow. Make a purchase at a good level, and if things keep going down further, reserve more for yourself to buy.
All right. Some good advice as always. Thanks so much for joining us. Nick Tsiolis with Farmers Keeper, and that is Markets Now.